All right, hi everyone. We're still getting a few more people logging in now, but we're just going to get ready to begin. So welcome and good afternoon. This is the first in our series of new webinars specifically for the recruitment industry. We'll wait for a few people on there, so then we'll get started. But I'm going to start introducing people as well before we get to the meat of the webinar. My name's Chris. I'm the Business Development Manager here at Crunch Accounting, and I look after our relationships with the recruitment partners. Joined today by our co-host, Crawford Temple, who is an IR35 expert and also the COO of Professional Passport.
Hi. Apologies for any coughing. I'm suffering with a bit of man flu at present.
Okay, we'll bear with you. Okay, and also, just before we dive in with Crawford on the IR35 legislation and what it means for recruiters, just wanted to take a moment to talk about Crunch and why we're qualified to help recruiters working in this space of contractor recruitment. We've been experts in our field for over 10 years. We have in-house IR35 expertise and a huge bank of knowledge and resources online for people to access and help themselves upskill on these sort of topics. And also on the solutions side, we are bringing to market an online IR35 classification tool specifically for recruitment agencies, detailed contract reviews by our IR35 experts for the contractors, limited company accounting and umbrella payroll packages covering all of IR35 scenarios, and options for legal and liability insurance following an outside classification outcome. Okay, so I'm going to hand over to Crawford now. Hope everyone's locked in. Don't forget, if you want to ask a question, there's a chat box. Have your questions there. We'll be picking questions up at the end. And also just a reminder that we will be sending the slides out via email to everyone who's registered afterwards, along with the recording of the webinar. So we will be sending that to you if you're logged in and registered. Crawford, over to you.
Thank you. So first just to explain who Professional Passport are, for anyone who hasn't heard of us or used us. Professional Passport assesses the compliance of the providers. We look at umbrellas that are just PAYE, umbrellas that offer expenses. We cover joint employment, construction industry schemes, and accountancy services. Where we confirm a provider's compliance, we have an insurance backing that says if we're negligent in that assessment and you suffer a loss through HMRC tax loss, then you can claim on the insurance. But what we've got is a free membership area where you can go in and join, and that creates the insurable interest to show that you're relying on our information. It also provides due diligence evidence if you build it as part of your process for the compliance side in relation to Criminal Finances Act. So that's us. Hopefully it'll all become a little bit more understanding why, once we've gone through the presentation, why using Professional Passport is worthwhile. So quick recap. Today's not going to be a lesson in IR35. We haven't got long, so we certainly can't do that. Most of you would be aware of IR35, and in most of the companies I'm talking to, both end clients and recruitment companies, what they admit is that they don't actually properly understand it. Since IR35's come in, originally IR35 was aimed as an end client liability, but lobbying changed that, and it was always the contractor's responsibility and the contractor's liability, which is why end client agency knowledge has been fairly low on it. And it was designed to catch what was happening at the time, which was a lot of people leaving a job on a Friday, coming back and doing the same job on a Monday, but as a contractor rather than an employee, and taking advantage of the tax advantages that were there. There's many reports on the legislation being too complex, it's been difficult to enforce. So as a result of that, the Revenue decided that what they were going to do was change the rules and move the responsibility for assessing it to end clients. And they started with the public sector. And whilst at the time of introducing it into the public sector, they said there were no plans to roll into the private sector, clearly that was what the agenda was going to be. And in making that move, effectively it meant that the end client had to decide the assessment, and then there were liabilities that applied through the supply chain. What they've learned through the public sector route is now being reflected in the new rules that are going to be updated in the move across to the private sector, because they saw different ways that it was being approached, non-compliance that was happening, and ways people were trying to circumvent it. So as a result, they've changed the rules. What will happen as a result of the rule change is both public and private sector will be aligned on the same rules. So anyone dealing in the public sector will see an update. One thing just to flag that has changed is that one of the objections they foresaw was the argument that it created an unfair administrative burden on small companies. So at this stage, they put a small company exemption in. Slide shows you what that is in line with the Companies House exemptions. My own view is that they will use the same arguments that they use to move it from public into private sector to remove the exemption. So I think it's only going to be there for a short space of time. So I wouldn't be building hopes and ideals around that one. Just a high level, IR35 covers main factors are it's all about delivering personal service, where the control is there, and the big one that most people argue about is mutuality of obligation. And you'll see in many of the press articles written that the court's understanding and interpretation of mutuality of obligation tends to not align with the revenues understanding and interpretation, and that raises a whole lot of questions around CEST, which we can have a look at when we get to that section. Problem is, it's complex, and then there are a whole load of other factors that can be considered within the round of the overall structure. And unless you are a real expert, it is very unlikely that between now and when the rules come in, you're going to be anywhere near ready to make any assessment. So you've obviously got to find, and crunch your building a process, you've got to find something that will support you in making those assessments. One of the key things that's come out because of the changes in the legislation and the way the liability structures work is that making an accurate assessment is absolutely critical. The responsibility is on the end client, and in reality, recruiters and end clients need to work very closely together to achieve this. And not only have they got to make an assessment, but within the requirements, the updated requirements now, there will be the requirement to produce what's called a status determination, which will detail why, the reasons behind why that assessment has been made. And clearly, if each assignment hasn't been considered, contractors will find that they're operating in a way that isn't reflected in their status determination, which is going to prove problems and extra work. The other big obligation is taking reasonable care, and reasonable care means you've got to be able to demonstrate that you've considered all the factors relating to IR35 and the assignment and assess them correctly in a fair way, and not just a blanket assessment. So they're very anti-blanket assessments, and they're not looking for one size fits all. As I said, if you haven't carried out a full assessment and a contractor gets into the role and suddenly finds that the way in which they're working is different to how it's been explained in their status determination, then there is a disagreement process which they're likely to trigger. And effectively, there's a period of time that you have to respond and deal with this. Failure to do so would allow the contractor to make their own assessment and leave the end client still liable for any of the, if the revenue disagree with that assessment, liable for the employment taxes that would arise. So if we have a look at how the information flows through, so effectively the client in the new rules is required to provide the status determination and the reasons for that, not only to the agency that they're contracting with, but directly to the worker. The agency, if there are other agencies in the chain, has to pass it down the chain until it comes to the fee payer, and the fee payer is then required to operate it in the right way. Now, the big change that's happened here is the fact that the worker is immediately being provided not only confirmation of their status from the client, but the reasons behind it. When this was put into the public sector, that wasn't the requirement, and the worker actually had no requirement to see that information. So it's now transparent, and that transparency with the requirement to take reasonable care puts the pressure on to make sure those assessments are carried out accurately and correctly. So liability, this is the big one, and the one that everyone is interested in. Effectively, what the revenue is doing at a high level is they're saying that wherever this breaks down is where the liability sits. So if a fee payer doesn't follow a determination and there is a liability because the correct tax hasn't been paid, they will go after the fee payer. Now, in the public sector, if they went after the fee payer and they didn't pay the liability, what ended up happening was they lost the money. With the change in rules that they've announced for this legislation, if the fee payer goes pop when the revenue goes after them, it moves back up the supply chain and can go to the agency and then back up to the end client. So what they're effectively doing is driving compliance through the supply chain, so that the end client will only want to deal with recruitment companies that they're working closely with, and ensuring that those recruitment companies are only working with compliant providers, whether those providers be umbrella companies, whether those providers be fee payers, and making sure that everything in that supply chain is aligned, because ultimately it can all come back to either the agency or the end client. And building those liabilities in that way means that the revenue will believe that all end clients and recruitment companies now have a significant vested interest in bringing compliance to the supply chain. And that's the key part, with working closely end clients and recruitment companies, and then agreeing what the policies are. So what umbrellas would you use? In what circumstances would you allow fee payers? When would you allow payment intermediary into the supply chain? All of these policies and procedures need to be considered. If an agency or worker appeals against an SDS, whilst you've got the period of time that you can answer the appeal and deal with it, ultimately, as I said before, if you don't follow the appeals process, then ultimately it will be the end client that ends up holding the liability for employment tax if the contractor goes out and makes their own appeal. So to avoid a whole series of appeals from the workers, if you create an accurate assessment at the outset and you recognise and ensure that the working arrangements that you're documenting within that assessment accurately reflect the reality on the ground of what the worker is going to experience, then ultimately you shouldn't experience too many appeals. Next one is just a slide that will show you the transfer of liability across the supply chain. So it's more for a future reference. We've just covered the points of it, but as it will show, liability passes back up the supply chain and ultimately to the end client. That's a direct lift from an HMRC slide showing it, but more for your future reference to remind you of what that is. So we move on to supply chain compliance. What you can see is that because of the liabilities, it's important that the supply chain is compliant. And what we have quite commonly seen is companies that will label themselves as an umbrella company that clearly aren't umbrella companies. And in some cases in the public sector, they were subcontracting work to limited company contractors and disguising that fact. So actually you weren't aware that they became a fee payer and you weren't aware of how the arrangements were working behind it. And therefore ensuring that an umbrella company is an umbrella company and operating in the way in which people would recognise them as an umbrella company is going to be absolutely critical to ensure that you keep all your providers compliant. One of the things that we do at Professional Passport is we are not approving umbrella companies who will subcontract to limited company PSCs, because I can't understand the reason why they would want to do that, other than to maybe disguise what the reality is within the supply chain. So make sure if you're using a recognised accreditation, it should recognise that and deal with that and help you in those areas. Big one to consider, and this is often overlooked, is the impact on rates and the contracts. So the legislation says that this is for payments made from the 6th of April. This is absolutely key. Don't miss this. 6th of April, payments made. So that will probably, for most of you, relate to the work that a contractor has done in March. And they'll invoice you and you're paying it after the 6th of April. Therefore, and we'll go through a timeline soon, But in theory, what you should have is everything aligned before the beginning of March, and make sure any previous invoices are settled. What you can't do is if someone's on, for example, £500 a day in January, and you forget to change that contract, and in March and April they're on £500 a day, you cannot take the employment costs out of that £500. The employment costs have to be on top. It's illegal to take them out. So you have to make sure that all your contracts and all your rates are aligned to the status and the budgets that clients have considered.
Just one very quick question as we're going through that. I thought it was worth tackling as we were going through. It says when we say agency throughout our slides, that means recruitment agency.
Yeah, sorry, recruitment agency, recruitment company, employment business.
Yeah.
I know everyone uses different terminology. Yeah, so that's I'm referring to the recruitment company within the chain.
Thank you.
So the summary really is dead simple. The end client's responsible for an accurate assessment. Caveated by recruitment companies or agencies need to work very closely with their end clients, because you could be liable if an end client makes an inaccurate assessment and the revenue successfully argues that, the recruitment company could become liable. So you need to make sure that you're comfortable with how your clients are making those assessments. There's significant cost implications depending on the structure. You've got to make sure, and we'll cover each of these points, you've got to make sure that the supply chain remains compliant. And then if you do all of that, hopefully you found a way of avoiding liabilities, and there are other areas that we'll talk about for liabilities. So let's just whiz through a few bits for you that may well help you and give you some clues. I think we've probably already dismissed this. One of the options you've got is become an IR35 expert. I've been dealing with IR35 for years now, and I wouldn't feel comfortable sitting down trying to analyse all the legal contracts and working arrangements. It is very, very specialist, which is why you see so many case laws and challenges to it. And you need to ensure that you've got a process that helps you do that. One of the things I like in some of the processes that are out there, and I'm sure Crunch will be able to deal with this with you, is where they give you an understanding of the good things, the neutral things, and the bad things within the arrangements. Because when you're working with your end clients, what that allows you to do is have an agenda to work with them on that will allow them to, this is such a fundamental change, people will completely rebase their working arrangements and restructure them once they get an understanding of the issues within it. Now, in some cases, they'll be able to rebase them so they're outside IR35, and that's fine so long as it is accurate. Do not manipulate something to be outside IR35 when that isn't the real case. Ultimately, most of the companies we're talking to, whether that be end clients or recruitment companies, are relying on an external provider that they're going to work with on the IR35 assessment. What is absolutely critical is that you don't just make a blanket assessment. Actually, blanket assessments can end up more risky than an accurate assessment saying someone's outside IR35. This is all about accurately assessing them. There's nothing wrong in the early days of grouping people together and saying we've got this group of contractors and they all operate with similar working arrangements, but ultimately, to meet the legislation, you will have to carry out individual assessments as you go through. So let's just have a look. I call it the transition period, and what you've got to do within the transition period. So effectively, a lot of the clients we talk to, we've got role-based assessments on the slide. We've also got relationship-based. What you've got are common features across a group of assessments and contractors. So if you've got 200 contractors within an organisation, you may well find that you can describe the relationships across those 200 contractors with maybe 6 descriptions, and they all fit within those 6. So what you've then got to do, once you've created those high-level descriptions, you need to then work out what the IR35 status is. And to do that, there are really, I suppose, 3 options. The first one that's out there is CEST. In my view, and based on recent case commentary around the fact that the revenue won't even, or is trying to diss their own CEST outputs, I'm not a great fan of the CEST tool. Its mutuality of obligation doesn't align case law. My fear would be that with all of the firms that are looking at carrying out a commercial proposition for doing this, it wouldn't be beyond the wit of man for someone to challenge CEST under reasonable care. And if they were successful with that challenge, then if you were relying on that for your assessment, then that would cause significant problems. So I don't see CEST as a viable option right now. They may well develop it and it becomes one, but right now it's not there, it doesn't work. You've got a load of third-party tools out there you can use. Cruncher developing one. I don't know whether, do you want to pick up there?
Yeah, I can just pick up this really quickly. We're developing a tool for SDS assessments, which essentially is developed by a commercial company. So it's developed with commercial mentality. It's developed fast. It's on the money, and it's not a government body building out that tool. So what we've got is a quick and easy to use online tool, which can prove your due diligence and duty of care, which is really important. It will include the mutuality of obligations, which Crawford has highlighted, and it will recommend actions based on the results of that test. And it's totally independent from HMRC. And then we'll be adding some premium options on top of that tool, which have been verified by legal insurance providers we're looking at. Legal liability cover on determinations is also being looked at, and we'll have the ability to push the reviews through into manual reviews there, so people can actually get an expert individual contract review process as well.
The third option that I was going to talk about, and once again Crunch will have an option around this, is you will have or may have within an end client arrangement no more than a handful of very specialist contractors who are perhaps on unique arrangements and unique contracts, and in those cases, rather than put it through a high level process that suits the mass market, you may want to get a specialist individual review for each of those assignments. They work where you're talking of low numbers. They don't work as volume based, which is what most people need. So at the end of the day, if you've got more than 4 or 5 in any organisation that need to be looked at individually by a specialist firm, then I would suggest you want to go back and revisit the role-based and relationship assessments, because most of them should be caught within that. One of the things that's often missed is in all of the end clients that I've been talking to, they're all starting with an assumption that all of their workers are in PSCs and they're all outside IR35, and any change to that is going to cause them a big bill. And the reality is that isn't the case. But an end client, oh, sorry, I'm jumping ahead of myself. We're doing direct engagements on this one. I'll cover the next one next. Direct engagement. So end clients, this is where a big opportunity sits for the recruiters. Direct engagements are where the end client is engaging the contractor directly, regardless of status, really. I mean, self-employed is the most risky, but it could still be a PSC, are becoming high risk. We're seeing many challenges, and all of the contractor sites are indicating to contractors that if they're directly engaged and the end client rules them inside IR35 and they're paying PAYE tax, they should go for the workers' rights. And something that used to be a big thing for recruitment companies and seems to have dropped by the way is that when you put a recruitment company between the worker and the end client, that effectively protects the end client from any workers' rights. So we're seeing more and more recruitment companies picking up direct engagements from the end client, doing specific lower margin deals for them, and effectively it's an insurance policy. So that's something, if you've got end clients that have got a lot of direct engagements, very well worth having a conversation on and developing that business. Sorry, I jumped ahead of myself. Let me go on to the next one, the operating structures. So the clients very rarely understand how the umbrellas, how the workers are operating. They get an invoice from the recruitment company for all of the work done by all of the workers, but it doesn't break it down. And so for that reason, the end clients have got no way of assessing their liability or their compliance risk within their supply chain because they don't understand the makeup. And so what we're suggesting to end clients is that they carry out, for want of a better word, a review or an audit of all of the recruitment partners, and they request from the recruitment partners a breakdown of how all the contractors are operating by those 5 categories. Limited company PSC, we're saying that they should be asking for the limited company name and company registration so they can make some basic checks. Umbrella company, they want the company name and registration. If a worker is self-employed through the agency, any of you doing that, high caution because you're liable for the taxes already on that. Any through agency PAYE, and always have the other category, because in my experience, there is always some harebrained scheme out there, which is, oh, I've got a good idea for you, that doesn't fall into the 4 above. And what that will allow an end client to do when they get all that information back is start making assessments. So for example, if they look at umbrella companies and they're starting to create a high, medium and low risk assessment of an umbrella, low risk would be that they've got a recognised accreditation. High risk would be when you look at them, they're doing things that maybe umbrellas aren't expected to do, loan arrangements, offshore, whatever it would be. And so it allows them to risk profile it. The problem from the recruitment company's point of view, it allows them to risk profile the recruitment company as well, and their robustness towards compliance. And so because of the liability structure in the new legislation, you've got to make sure that you're operating in the right way with the right companies. Otherwise, recruiters won't want to, and clients won't want to take those recruitment companies forward in the new world because of the risk of them ultimately getting liabilities. So in terms of cost implications, once you've got all that information, you're able to start assessing. So when the end client writes out to the providers and says, we want the recruiters and says, we want all this information, they can, while that's going on, be doing all of their high-level IR35 assessment. Easy. If an assignment is outside IR35, limited company PSE, nothing changes. Umbrella company, nothing changes, although some may move to limited, and agency PAYE, nothing changes. The big changes happen when you get to inside IR35, and that all relates to the limited companies. Umbrella, nothing changes. Agency PAYE, nothing changes. It's dealing with those PSC contractors. Now, what's quite interesting is when you say to clients, well, if you've got 200 people inside IR35, 200 contracts in, is that going to cost you more money? They go, oh, it's going to cost us a fortune. And you say, but what happens if when you do your analysis, they're all in umbrella companies? Or 90% of them are in umbrella companies? There's no cost implication because you're already showing that the rate you're paying attracts umbrella workers, and therefore it's likely to have little or no cost implication. So understanding the operating structure and rolling that over the assessments has been an eye-opener for many end clients, and actually helps them smash this myth that it's going to cost them 30% increase on their budget. It only impacts them where it's PSCs that it relates to. So effectively, we know that where the company is inside IR35 and it's PSC, then effectively the contract rate on any payments made after the 6th of April is effectively the gross taxable pay, and all the employment costs have to go on top. So I think the next slide, we've got a quick worked example for you. So the first column, current limited company outside IR35, it basically shows £300 a day. We'll ignore VAT because it's relevant for the purpose. You invoice for 20 days work. Ultimately, it costs £6,000. And we've simplified it in terms of ignoring margins and everything through the supply chain. After April 2020, the next column, if you didn't change the contract and make amendments, you would now be paying £6,758.73p. If the end client said, well, I want the cost to remain the same, you'd have to bring the rate down to £266. That's an approximation because you can see it's £18.5 out, because unfortunately I couldn't be sad enough to keep working until I found that £18.5, so apologies for that. And the next one is you want the contractor take home to remain the same. Now that's quite interesting because the contractor take home, if you go back to the first column, it says it's £4,500, and in brackets you'll see £491.58. So the contractor will actually think they're taking home close to £5,000. The £491 in brackets is future tax on dividends, which many of them don't understand. So it depends what measure you're going on, but effectively it's £7,330 to deliver £4,500 of net income through to the contractor. So you can see it's significant costs, and therefore understanding and preparing for this is key. So what I'm going to try and do to get your brains focused on timings is let's have a look at the structure. I call this my Loch Ness Monster slide. So on the left, we can see it's payments made in April 2020. So if it's payments made in April 2020, it's going to be work carried out in March. If it's work carried out in March, you're going to have to issue new contracts before March and ensure all invoices for the previous contracts have been submitted and paid. To issue new contracts and new rates in March, you're going to have to give notice in February, because I would guess that most people are on a 4-week notice period. To do that, and to make sure you're going to keep your contractors that you want to keep, you're going to communicate or start communicating with the contractors, I would guess, in January. To even start communicating with them, you need to have decided on your new rates for all those contractors affected by the end of December of this year. And to do that, you've got to understand the assessments, understand the public budget implications, and agree new budgets. So effectively, between today and the end of December, you've got to work out what the status of all your workers are, what structure they're all using, understand the budget implications, sign off the new budgets, and then come January, ready to start the communication process. Time is running out. A lot of people are hoping that this will be delayed. I'm not convinced that it will be, but time is running out. If you leave this much later, if you look from January moving forward, I don't see how you can trim very much out of that time frame. So you're in danger with that one. Last couple of slides. Avoiding liabilities in supply chain. It's not just about off-payroll legislation. There's Criminal Finances Act, there's Senior Accounting Officer rules, and there's various targeted avoidance rules. And any of those where you, depending on the scale of the non-compliance, can be used and triggered. Professional passport, I said at the time, we do all the due diligence and checking of the providers. So effectively what end clients can do is they can make it a contractual obligation that companies in the supply chain have to be accredited. And what that helps you is deal with a number of those, like the Criminal Finances Act, because it will provide you the due diligence in that process. So using accredited providers is a significant advantage. This is probably for you.
Yeah, so I just wanted to, we started on, so Paul run through a lot of really great bits of advice and bits of information there, and how professional passport can help. I just wanted to touch on something I mentioned in the earlier slides, which is the solutions that Crunch provide for contractors. And essentially it falls into 2 key sections. One is umbrella payroll solution, and umbrella payroll solution is essentially one that we've talked a lot about today, but we're also going to be bringing to market a new package, which is limited company accounting package, which is going to cover all of the IR35 scenarios. So there are a couple of different ways ways and places where the money might be deducted, either gross when it's from the end client, or the contractor may still need to deduct it in a small business scenario. And we're basically, long story short, wrapping up all those scenarios into one of our limited company accounting packages, so that contractors working through agencies can move seamlessly between different solutions depending on what they need, along with combining it with a standalone, very strong, professionally passport compliant umbrella solution. So that was the sort of end of our main slides. We're going to pass over to questions now. So if you've got any questions, please do put them into the chat now. Any questions specifically about Crunch Crunch products, we'll probably park and follow up separately, but do feel free to ask them or ask follow-ups. I'm going to pass over to Crawford and to Jake, our content strategy manager, who's been keeping an eye on the questions for a few pertinent questions. We've got time for them.
Thanks, Chris and Crawford. I hope everyone found that useful. One of the questions that we did have was coming back to STSs and appeals against them, and it came from Peter Newman. It says, if an end user makes a determination that's then challenged by HMRC, who's liable for any unpaid tax or national insurance? And it says, presumably in this situation, HMRC would deem the end user to be the non-compliant entity, and therefore liability would be with them, rather than the fee payer who's compliantly followed the original STS.
Right. So no, it could very well be the agency, even if the end client has made the determination, and then if the agency didn't pay, it will go back to the end client. The issue really is around how it fails, and one of the challenges I think for the recruitment companies is currently what most recruitment companies will do is operate with a single contract that they'll have as a IR35 neutral contract and supply that out to every limited company contractor. In this new world, you need to get your contracts more aligned to the arrangements with the end client, because without doing that, it could be your contract that creates the space for the revenue to create the notional contract that proves that the assignment isn't actually outside IR35. So there's a number of possibilities with it, but it could be agency one in those cases that holds that liability.
It's an incredibly complex area, I think, isn't it?
It is, and I think the key thing really that comes out of it is if you are working very closely with your clients, then effectively you've got each other's back. I think anyone who's not working closely with the clients and clients who aren't working closely with their recruitment partners, there are going to be car crashes.
We've got a question here about the small company exemptions from Ian Brassel. It says, the client being supplied to is classified as a small company, i.e. they satisfy at least 2 of the 3 HMRC criteria. What does this mean to the contractor supplied and the recruitment business doing the supplying in terms of taxation liability?
Okay, so if the small company exemption is met, it means that the rules as they are today continue, the Chapter 8 rules. So it remains the contractor's responsibility to assess their status in relation to IR35 and run the deemed payment calculation as currently defined. And the recruitment company obviously has no liability. It's as it is today.
Thank you. There's a question. So yeah, and obviously as it is today, could still be inside or outside.
Yeah.
The person that has to make the decision on
and
inside
holds the liability
outside and holds
the contractor.
Is the PSC.
Yeah.
Yeah. Okay. We've got a question. I'm reading between the lines here. It's from Stuart Bass Twitcher. He said, just to clarify, liability is payroll. By payroll, I presume you're suggesting that you're using a payroll company to actually make the deductions, then a recruiter, and then a client. So where you've got like a multiple agency thing, or where you might have a recruitment agency and then the recruitment agency is using a payroll supplier.
Yeah, so if you have a look at the Stuart, if you have a look at the transfer liability slide when they come through, which will be, I think he's going to put it up for you. So effectively that shows it. So if the fee payer doesn't pay the correct amount to the or deduct the correct amount of taxes, then basically that liability will go back to the agency, and then back to agency one, and then back to the end client. Yeah.
Yeah, it's a complicated drawing. We actually lifted this directly from HMRC. So
if you haven't looked at it, it's worth downloading some of the stuff on the HMRC website about it, because it will help you, I suppose, gain more information. We've done half an hour today, which, to be fair, is no more than a very high-level overview of it.
Yeah. We've got another question in, this time from Kerry Roberts. It says, I think this is about timing and order of how things happen. It's a very justifiable question saying, how can we issue the correct contract if we haven't received a determination from the end client?
Well, the end client is required to provide that determination. If they don't provide the determination, they're not complying with the rules, and effectively, because there's no determination being issued, then you can make the assessment yourself and deem it to be outside IR35, and it's the end client liability.
Yeah.
If they don't comply with the rules, they hold the liability.
Yeah, that's exactly what Crunch would say as well. It's because the rules are definitely saying that the end client has to produce the status determination. If they have not, then they're not compliant. However, you shouldn't take taxes off someone unless you know that you're meant to.
Correct.
So in that instance, you would probably be best treating them as outside IR35 until you know otherwise.
Yeah. And in doing that, you haven't got the liability because the end client's liable because they've provided the information.
Okay. There was a question from Tim O'Shea on direct hires. So it says, as an internal recruitment company and a wholly owned subsidiary of the end client, would contractors be classed as direct hires? So we do use second-tier agency contractors too, and I
The
think
only way I could answer that, Tim, is by, or the only way I can guide you to answer that is to look at the contractual arrangement. So if you're acting as a recruitment company, recruitment business or employment business, and the contractual arrangement has you sat in the middle, then on that basis, the fact you're internal shouldn't make a difference, because effectively you'll be subject to the agency regulations and the Employment Agency Standards Inspectorate. If that isn't the case and the contract is directly between worker or worker PSC and then client, then that is what the contractual engagement would be. So it will be your contractual chain and who's contracting with who that will answer that question for you.
And they've also, HMRC have also been some arm's length regulations, so you can't use a smaller company to get around these things. They're already onto that as one.
There's a lot of suggested workarounds, which I'm always saying caution. One of the most common ones we hear is statement of work, and there are things I'll just retitle everything a statement of work and happy days. To be honest, the vast majority that I've seen is no more than a statement that doesn't work. And the problem with that is it's all going to fall over and there's going to be liabilities everywhere.
Okay, right. A question again from Stuart says, if the end client doesn't make the assessment and we supply staff via umbrella as an employed entity, have we avoided any scrutiny? I presume by we you mean yourself as a recruitment agency. So if you're supplying staff via umbrella at the moment, or you're supplying staff via umbrella after.
So I'm going to answer that in two ways, Stuart, to try and help you understand it broadly. A worker in an umbrella company is not subject to the rules because they are paying PAYE levels, assuming it's an umbrella as I would define it, and HMRC would recognise it. They're paying PAYE levels of tax, and therefore the rules don't apply. However, where you have to be careful is if you are saying to a contractor you have to work through an umbrella company because the assessment is inside IR35 and you haven't formally made that assessment, then you then breach the rules. So you'll see companies saying at the minute we're only going to engage PAYE workers, and if you look very carefully at everything they're saying, they are not referencing at all IR35 or these rules. They are just saying we're engaging PAYE workers. As long as no one in the supply chain references the rules, that's perfectly acceptable. The moment someone says we're only going to engage a PAYE worker because we believe you're inside, you've opened up these rules, and it would be my understanding that you'd have to still provide that status determination. Failure to do that, even if you were saying it was PAYE, would mean you're in breach of the legislation. So there are lots of little traps and pitfalls all along the way. My advice is always do the job right. There isn't a magic bullet to take you through this. If you're trying to find escape routes, it's either going to cause a problem for the clients because they won't get the right calibre of workers. I think one of the differences with the private sector is you are going to see people who are doing it correctly, and what will end up happening is they'll have the best pick of the people out there, because in some cases they might even be able to drop their rates if they say you're outside IR35. And if you want the right calibre of workers and you're saying you're inside IR35 or umbrella, your rates may well have to go up.
Okay, there's another question about saying if you provide help assessing providers and supply chain compliance and potentially IR35, then do you hold liability for your assessments? So Stuart, I think that might be saying if you as a recruitment agency provide help to your end clients in assessing them, do you hold the liability? I think that's the question.
Yeah, just because you're providing the help in assessing how and who does the assessment is irrelevant from the legislation point of view. It's the outcome of the assessment that is driven by the legislation. However, if you're offering a service to clients to say, we'll do this assessment for you, and you end up getting those assessments wrong, it would depend upon the reasons why those assessments were wrong. So if someone could prove that you've been negligent in carrying out the assessments because they haven't been fully considered, then ultimately there could be a claim against you and against your PI insurance. If it turned out that the set of circumstances that you'd been given in making that assessment was inaccurate and didn't reflect the true nature of the relationship, then you'd have no liability, and it would be the person who's provided the information. So it depends on the basis of it.
Okay, one question from Charlotte says, what's our views on an indemnity from an end user to an agency via contractual docs? So I presume this is trying to make sure that the recruiter doesn't end up with liabilities, and whether the whether either being offered or demanding contractual agreement with their end client to make sure that they're right.
Yeah, it depends on the end client. I'm always nervous, and I see them all the time, liabilities and indemnities in contracts, because an end client is unlikely to offer that without a whole load of constraints around it, because what happens if it's the recruitment company contract that caused the failure against IR35 and nothing the end client's done? So that it wouldn't be as simple as that. I think what's more likely to do or to happen is that people are going to get more aligned and work more closely. Having indemnities and such like would suggest that the working relationship isn't close enough and trusted enough, and therefore they're all looking to cover each other. And in a lot of cases, the indemnities, when you come to call on them, aren't worth the paper they're written on.
Okay. Actually, Stuart's come back on his question. He says Stuart's question was about whether if Crunch or another expert were providing help to recruiters or end clients to make the assessments, then would the person that has made those assessments be liable or be able to offer an indemnity against
Same
it?
as previous answers, Stuart. It depends on the reason the failure happened. So if a company is offering a service to you and says we'll assess all the workers, and you've provided accurate information around both the contractual terms and the working arrangements and everything, and they failed in their duty of assessing that correctly against the legislation, and you can prove that they've been negligent in that. So, and this was my point when we go back to CEST. You know, my fear with CEST is it's not addressing mutuality of obligation correctly. It's the revenue zone determination. The courts have already deemed that the revenue's determination is incorrect. So at some point, could someone challenge it, which is exactly the point you're making. And so, yes, if someone's offering a commercial service and it doesn't do what it says on the tin, and they are within the service, they're negligent in that, then you could. An example of where you couldn't do it, for example, was if a new IR35 case came to court, and maybe that changed the interpretation of the rules slightly. You couldn't then hold that provider liable for the historic assessments they've done based on the known information at that moment in time.
I think this is one of the big difficulties, isn't it? But with
Yeah.
that, there isn't a black and white law. A lot of this is being built up on case law, and the case law is still happening. You know, HMRC is still losing cases that they're bringing.
Okay, they've lost a case very recently, and that further clarified mutuality of obligation. So, you know, one of the things that you should be considering if you're looking at the third-party service on it is exactly that situation where, so if Crunch are offering you a service and they're assessing all your contractors, the key question is, so what happens if there's a clarification in the legislation? How simple is it to rerun that tool across all of our existing workers and identify any that could be affected by this new clarification as a result of the case law? And if that's a hugely laborious role, then that's going to be a problem. If it's a relatively simple process, then that's a real advantage. So assessing who you're going to use, and that's why I was sort of saying, you know, the individual assessment. If someone's saying to you, we'll get our lawyers to look at each of your contracts and each of your arrangements, make the determination, you do that for everyone. The problem you'll have is that when a clarification happens, the individual lawyers have got to do everyone again, which number one, you've got a big time frame, and number two, the cost of having someone sat there and do it normally is prohibitive. I hope that answers it.
Yep. I think that's been, thank you everyone for your questions. It's been really good. I think I just maybe the one thing that got touched on a lot was the different contracts. There could be a contract between an end client and the agency, and there could be a contract between the agency and the contractor. And one of the things that is very important is that all of that gets looked at, as well as the actual working practices.
Yeah, and it's making sure that they're all aligned. What the revenue does in an IR35 case is they'll look where there are differences within the contractual chain, and where that's the case, it allows them to build what they call the notional contract, and basically they can define that how they want, because the big gaps of information. The reality of the situation is, and this is why I said earlier on the presentation, that an outside IR35 determination can be the safest route, because if the end client says this is the relationship we have with our contractors and that's accurate reflected in the contract, and the contractor says this is the relationship I have with my client and the two are exactly the same and reflected in the contract, there is no space to play, and therefore they can't bring a case, because if both ends of the chain are describing exactly the same relationship and that relationship is clearly robustly outside IR35, they're not going to bring a case. And that's the whole point. So I think clients have got to understand some of the implications and decisions they're making in relation to IR35 and have a process that allows them to change all of their relationships. This is so fundamental. In some cases, you'll see clients that have made decisions that would appear to be the right decisions, but when assessed against IR35 and the cost implications, they'll very quickly change those decisions and change those arrangements. I think that's what a lot of end clients are going through the process of doing now.
Yeah. Thank you. So I think some really key takeaways there for people. Blanket decisions are bad. Wrong decisions are worse. I think it's also important to say that it's not necessarily the case that this means everything is inside. That would be a blanket decision. You know, there is definitely still going to be work that is outside IR35, and if you try and tell the worker that actually they're inside, they could still appeal against that, and you know, someone
the worker can show reasonable care hasn't been taken, then they can go make their own assessment and you hold the liability. So,
so it really is about playing the game with a straight bat, I think, isn't it?
Yeah, definitely.
Okay, right. I'd like to thank Chris very much and Crawford very much. We'll definitely make sure that we get back in touch with everyone who signed up and who attended. I'm sure Chris will be in touch to see how we can help you going forward. And I'd just like to say thank you very much to everyone. Thank you.
Thank you.